All right, welcome back, everyone. Welcome back. We'll let you all get settled quickly before we finish up. Like I said, we're almost home right now, and it should be a really great finish. Trust me, the last panel is definitely, like I'll say, not least. It is a great panel, so looking forward to finishing this strong. But with that said, our next speaker is a national leader on financial issues, and we're really lucky to have him representing us in the U.S. Senate. Senator Crapo was a former Senate Banking Committee chairman. He's the current ranking member of the Finance Committee, and he's always looking out for Idaho's interest in the financial space and specifically in the financial technology space. So he's going to give us a few remarks, and we hope you enjoy. Unfortunately, he wasn't able to join us in person due to a conflict, but I think you're going to enjoy his remarks, so we'll go from there. Thanks.
Hello, I'm Senator Mike Crapo. Welcome to the inaugural Idaho Department of Finance President's Day Financial Innovation Lab. And thank you for having me speak with you virtually today. As ranking member on the U.S. Senate Committee on Finance, I strongly support free market policies that fuel economic growth. In addition to serving on the Senate Finance Committee, I am a member and former chairman of the Senate Committee on Banking, Housing, and Urban Affairs. This committee has jurisdiction over efforts to promote the stability of the financial system and responsible lending to families and businesses. Looking at the bigger picture from Washington, D.C., it becomes increasingly evident it is an exciting time to be in Idaho. Idaho is one of the fastest growing states in the country. With this growth comes new, well-paying jobs and opportunities for entrepreneurs, like many of you in this room, at the intersection of technology and finance. Idaho has been a leader in technology for decades, but now is a particularly exciting time for innovation. Digitization and data in particular are constantly evolving, challenging the way we have traditionally approached and conducted oversight of the financial services sector. The rapid pace of innovation, driven by advancements in artificial intelligence, blockchain, and other emerging technologies, has a far-reaching impact that demands our attention. Furthermore, the rise of fintech companies and digital platforms is reshaping the way financial services are delivered. From online banking to robo-advisors, technology is democratizing access to financial tools and services. However, we must be vigilant to address the issues of data privacy, cybersecurity, and fair competition to maintain a financial system that serves the interests of all Americans and fosters sustained economic growth. As this marketplace rapidly develops, so must we constantly evaluate our regulatory and oversight framework, much of which was designed prior to the digital era. To the extent that there are improvements that can be made to better foster and not stifle innovation, we should examine those. Overzealous regulators in Washington are publishing an endless stream of regulations and guidance touching on everything from bank capital requirements to cyber incident reporting procedures. States like Idaho are taking a much more measured approach. Our federalist system allows states to experiment with different regulatory regimes, and Idaho has the opportunity to lead the way with smart, targeted regulations. We're seeing the benefits of that approach with record job growth in the tech space and billions of dollars in investments to build the necessary capacity to create the future right here in the Treasure Valley. Bringing together industry, policymakers, consumers, and other stakeholders at forums such as this Financial Innovation Lab are the vital first step to successfully building the way forward. I encourage my friends and colleagues in Washington to follow Idaho's example and do their due diligence and listen to innovators and practitioners to ensure they are not stifling innovation. As this sector continues to grow, it is worth examining what improvements can be made to ensure the regulatory landscape welcomes that innovation. Thank you, Director Patty Perkins, John Yaros, Ed Vasco, and everyone who helped organize this event. Today is an exciting opportunity to hear from many of the leaders in financial technology, and I look forward to our continued partnership.
Well, all right, as I mentioned, this may be our last panel today, but it's certainly not least. Obviously, financial technology policy is growing in importance and complexity right now as we speak. And as you can see from the fintech tree we have behind us, every area of the financial services industry is being affected. You kind of start at the roots with access and identity management and cybersecurity. You move up the tree into the emerging technologies that we discussed today, and it's touching every branch of the financial services industry, as we mentioned: lending, investing, digital assets, payments, etc. So the question is, what is the right approach to financial technology policy, and what issues should we be focusing on in this complex environment? Luckily, we have an all-star panel right next to me being led by one of the most exceptional minds on all things related to financial services and government relations to discuss this in the form of my good friend and colleague, Michelle Lieber. So I'll turn it over to you, Michelle.
Thank you, John. It's such an honor to be here today for me. And I want to thank Patty, John, Ed for putting this together. Prior to my current role, I serve as Global Head of Government Affairs for FactSet, which is a software and data company. But prior to this role, I had the great fortune of working with John. And when he told me he wanted to move to Idaho, I was a bit perplexed. I will say, though, in the last couple of days coming here, now I'm a bit jealous because it truly is an amazing place. We took a drive yesterday and it was absolutely beautiful. So thank you for the opportunity. John and Patty are doing such amazing work here, as we've seen today. And I hope that you all know we're coming here from Washington to actually talk about what's going on in Congress, but it definitely impacts all Idahoans. And so without further ado, I'm going to introduce my panelists, and then we'll do a panel about what's going on in Congress today. So I'll start with Becca Alcorn.
Hi, I'm Becca. Really nice to see you all. I was with Senator Crapo for 7 years, so I feel like Idaho is one of my favorite states. I absolutely love it here. I miss working with the senator. I left in October. I now am at a lobbying shop called Mindset, and we focus on financial services policy.
And now I'll introduce Andrew Gleaton, who's currently with Senator Crapo.
Hi there, Andrew Gleaton. I'm a legislative assistant for Senator Crapo, handling banking, tech, immigration, among other policies. I've been with the senator for 4 years. I followed up, I'm Rebecca's successor, but big shoes to fill. And so I'm in DC now, but I did graduate from Boise State, so it's good to be back.
And Connor Carney.
Hi, Connor Carney. I'm with Robin Hood Markets on their government affairs team. Previous to that, I spent 7 years on Capitol Hill advising different members on both the Senate and the House side on financial services policy, and it's a pleasure to be here with y'all.
And Tim Height.
How's it going? Tim Height. I serve as senior counsel on the Digital Assets, Financial Technology and Inclusion Subcommittee for the House Financial Services Committee under Chairman McHenry. So great to be here.
And I will say, before we start the panel, in my spare time, I get to work with a lot of congressional staff, also in my day job. And these are four of the most amazing minds on Capitol Hill. And so we're really lucky to have them here to talk about their experiences, but also to talk about some of the things that are happening today. So I'll start with Becca. Becca, you handle fintech, digital assets, security, but you also, when you were in Congress, you worked on the Financial Data Transparency Act, which was enacted as part of the National Defense Authorization Act in 2022. Love to hear your thoughts on what led to the important legislation, and from your perspective, you know, kind of what led up to it and what you focused on when you were drafting the bill.
So Senator Warner and Senator Crapo worked together along with Chairman McHenry to enact the Financial Data Transparency Act. The bill was really simple: bring data into the 21st century for financial regulators. The goal is to make financial data have a rulemaking, joint rulemaking, make data machine readable and interoperable. And that was the congressional intent behind the legislation, and now the regulators are working on implementation of that law.
And that includes 7 FSOC regulatory agencies. We'll have a lot of state implications. Andrew, would you like to talk about FDTA implementation?
Yeah, so Rebecca did a lot of good work with Senator Warner and her counterparts on the House side to get FDTA enacted as part of the National Defense Authorization Act. Now the fun part is implementation. So Congress passes a law, but then the regulatory agencies get the law and they have to figure out how to implement it. And regulators do have a lot of discretion on how they figure out how they're going to do that. Right now with the FDTA, we're seeing that they are having issues with meeting the statutory deadline. So part of the FDTA was they had 2 years to create rules and then work on implementing the actual rollout. And we are coming up now on that 2-year deadline, and we haven't seen those rules. So our role in Congress is reaching out to the agencies, either behind the scenes to talk to their congressional liaisons, the principals, or at hearings we can ask them questions when the regulators come to Congress. And we also submit QFRs, or questions for the record. So after a regulator comes to Congress, we can send them a written list of questions that they have to answer, and we have done that with several regulators. The financial regulators came in November, and we asked those questions. Secretary Yellen came in her role as chair of FSOC, and we asked similar questions. So while they're still working on rollout, we are at least letting them know that Congress is watching. We're still prioritizing the rulemaking, and you guys need to, do your job and get this done.
Yeah, one of the things I think that this will help with is a lot of people still submit data and information in PDF format, which is kind of really arcane. And so hopefully we'll bring everybody up to the same place and be able to do it in a machine-readable fashion. Mm-hmm. I'd like to take a look right now, Connor, if you would talk a little bit for us about SEC predictive data analytics rule, which we heard Commissioner Peirce discuss a little bit today, and your thoughts at Robinhood and your perspective, Connor, on next steps with that rule.
Yeah, so just taking a step back, at Robinhood, our mission is to democratize finance for all. And the way we're able to do that is using technology to leverage those tools so that people can trade for lower cost with no account minimums and buy fractional shares so that any average person could own a portion of Berkshire Hathaway, which wasn't really a possibility before unless you had $2,000 sitting around that was able to be invested for a full stock. So what Michelle just mentioned, the PDA proposal, and when I say PDA, I'm not talking about the overly affectionate couple at the restaurant. I'm talking about predictive data analytics, and what that refers to is a rule that the SEC has proposed that would heighten the standard for investor interactions using any form of technology. So it's marketed by the SEC as a proposal that's looking to get at conflict of interest presented by AI or other types of emerging technologies. But in reality, what it's going to do is it's going to force firms, whether it's a broker-dealer like Robinhood or an investment advisor that's using technology like, as referred to as robo-advisors before, to not be able to offer that technology to their customers. And it's going to really hurt first-time investors, people coming into the market, a lot of Hispanic and African-American investors, because they use mobile apps, whether it's an investment advisor or a broker-dealer, depending on what the service that's being provided, it would prevent us from providing that service. And it's really troubling to me that I imagine that the intentions are good, obviously. We always want to make sure that an investor's best interest is taken into account, whether you're at an IA and you're talking about the fiduciary standard or regulation best interest when you're talking about a broker-dealer. But at the end of the day, if a firm is using artificial intelligence or predictive data analytics and they're making a recommendation or giving investment advice, the fiduciary standard and whether it's the suitability standard or regulation best interest at the SEC, those technologies are covered if you're making a recommendation. The issue is that this rule is trying to create any kind of investor interaction and heighten that standard to a uniform fiduciary standard, which is difficult. Like, I'll give an example. When I'm following a certain stock, I might opt in to getting investment news about that stock, or I might opt in to say, I want to know when that stock falls 5% or increases 5% so that I can make the decisions I need to make on my own, because this is, after all, a self-directed product. Well, 80% of the market uses market orders. They don't use what are called limit orders, and there's a whole variety of reasons for that. But under the proposal, that technology, we would not be able to provide those push notifications to those investors. So it's one of the things that I'm obviously following very deeply, because it would ruin the whole model of self-directed brokerage, which is very, very different. And I'm not casting any aspersions on the traditional investment advice model or the traditional broker-dealer model, but self-directed brokerage has enabled more and more people to enter the market. The Federal Reserve does a report every 3 years on how many Americans are invested in the stock market. And the latest report said 58%, which is a marked increase from what it used to be. I think that's good for society, especially when we're facing future insolvency at some of the government programs that are intended to help people in their retirement age. Like, we need young people investing. And any kind of rules that make that more difficult, I think is not just not good for the individual, but it's not good for society.
I'm going to turn to Tim, but one thing we talk a lot about is making sure we can still foster innovation while preventing harm. And I think Tim is an expert on that. I will say there was a headline in Politico today that says the House in action captures world attention. So that's a big burden that we're placing on the House of Representatives. Tim, I'm going to turn it over to you. We could talk a little bit about some action in the House of Representatives. Tim is at the House Financial Services Committee. Would you like to talk a little bit about the digital assets legislation and where we are?
Yeah, so like I was saying, I work on the Digital Assets Financial Technology and Inclusion Subcommittee. So that jurisdiction, as you could probably guess, spans quite a bit because fintech's quite a broad term. Digital assets is a pretty big industry in and of itself, as well as we do a lot of bank fintech partnerships, and we help with the oversight of how the agencies approach some of these issues as well. But you mentioned digital assets, so some may have seen it in the news. Over the last year, we've been working day and night on stablecoin legislation and also market structure legislation. So the reason being, this is one of Chairman McHenry's top priorities. He's worked on it going back a few years. When he became chair about a year ago, it seems like 3, he was speaker at one point in between there too. So when he took over the chair, he made it a top priority of his to pursue a market structure regulation for digital assets, because what we've seen so far is regulation by enforcement for the most part from the SEC, because it's difficult to define what a crypto asset security is, and the SEC just hasn't done that, despite some of the cases where they've brought suit for people marketing what they call crypto asset securities, but they haven't actually come out with a definition or a process by which you could register them. So, we looked at what we would have to address, and as we saw earlier today, we have the SEC and the CFTC. The CFTC, as it was mentioned earlier, they'll oversee the Bitcoin market because it's commonly agreed that Bitcoin is a commodity. Ethereum as well is usually agreed to be a commodity, and the rest, there's still a few questions as to if they meet the definition of a commodity or security. So we worked with the Ag Committee even prior to the Congress, but especially over the last Congress, we had hearings where we combined the Financial Service Committee, the Ag Committee, where we brought in experts, the members, they built up a record to show, all right, here's what works, here's what doesn't work. And the ultimate result was a bill that would allow for issuers to go to the market under a new type of exemption, and eventually they would be able to launch their products. Their products could be decentralized to the point where it could match the definition of a commodity, in which case it would go under the umbrella of the CFTC. So, that was a lot, tried to condense it there. And on the other hand, we have stablecoin legislation, a little bit of an easier concept. I'm sure a lot of you know the main stablecoins, Tether, USDC, and they serve an important function in providing liquidity and creating the markets in the crypto economy. So what we did there is we tried to come up with a framework that would allow both banks and non-banks to have multiple options in terms of how they would want to pursue or issue stable coins. And one of those routes would be through the state, another would be through the federal framework. There's been constructive conversations on a bipartisan basis, so we're continuing those efforts, and it only makes the news about once a week, and they'll always say there's a deal, but the conversations continue.
Andrew, let's go back to the Senate, and if you could just give a little bit of the Senate state of play and how that will impact Idahoans. I think that might be interesting for folks.
Yeah, well, I mean, when I think of impact on Idahoans, the most immediate thing that comes to mind is the looming government shutdown. You may have heard of March 1st and March 8th are the two deadlines. The reason for that, if you're not aware, there's 12 government funding bills, so they all cover different areas. We typically see, so they are partially funding a section of the government. 4 of the bills are set to expire at midnight on March 1st. The other 8 are March 8th. And right now, for President's Day, Congress is in recess. So the House is coming back February 28th, the Senate comes back February 26th. That gives us 3-4 days to figure out a shutdown. It's unclear right now what that's going to look like. Are we going to kick the can down the road with another short-term extension? Are we going to finally pass FY24 appropriations halfway through the fiscal year? We'll see. But for Idaho and Idahoans, the government shutting down is bad politics and even worse policy, because in a state like Idaho, you have a lot of focus on natural resource development. That means a lot of federal land. And during a shutdown, the ranger stations are closed. There's no one answering the phone if you need a permit or to contact an agency. And the federal workers aren't getting paid even if they're working. So at Mountain Home Air Force Base, 45 minutes away, our men and women serving our country will not be getting paid, even though they're still expected to show up and do their work. And that's not right. So there's a lot of, there's both more reasons and practical reasons that we need to figure out the government funding. That's...
And Congress is out until the 28th of February. So we have a very short window before a potential shutdown. So Becca, would you talk a little bit about your experience when you worked in the Senate and working on fintech issues with the state? That might be an interesting analysis.
Well, one thing that really struck me when I was with Senator Crapo is Idaho is one of the fastest growing states. So there's a lot of opportunity for industry, and industry's moving here. There's clearly big workforce gaps. So I really enjoyed the workforce panel, just hearing how fintech is technology in general is a great way to attract folks to the state to work at these technology jobs, go to Boise State. So I always think about, from a workforce standpoint, that's where I think policy has an ability to impact Idahoans. I also think about it a lot. Idaho is a very rural state, and fintech is partnering with banks, and you think about communities where maybe there's not a physical bank, there's fintech and it can meet consumers' needs. So I think really all around fintech policy impacts Idahoans. And it's important to keep discussing these issues as technology changes. And another thing, obviously, is cybersecurity, artificial intelligence, making sure that we have good governance around those so that consumers are protected as they have access to these new products through fintech. So that's a really long-winded way of saying all policy impacts Idahoans, but I really do think Idaho is uniquely positioned to be a leader in this space.
And Connor, do you want to talk a little bit about the NASA model rule for retail investing? Because I think that ties into this notion of state and federal collaboration.
Absolutely. Well, John's heard me. I've talked John's ear off a million times about this. We spent many hours on the phone. But the NASA model rule mirrors the SEC's predictive data analytics rule in a lot of ways, and what that rule is doing. And again, when there is investment advice given or a recommendation made, I don't think anyone in this room would disagree that the customer's best interest has to be made in mind. But the NASA model rule is trying to take, a few of more paternalistic states' ideas that there needs to be a heightened fiduciary standard in any investor interaction and apply, and they're pushing to apply that in every state. Fortunately, you have a great state securities chief that understands that this is not the best way to go about this. And the reason being is, like Rebecca was saying about bank partnerships, there's a lot of communities where they might not have a broker-dealer or an investment advisor in that community. And what technology enables is for people to get those services at a low cost. And so anything as simple as an investor education video could be perceived as a recommendation under the NASA model rule, which really doesn't make sense. As we were listening to earlier on different panels, financial education, it needs to happen in schools, but it needs to be a continuing education throughout your entire life. You're constantly learning about new things. And for example, options might not be right for everyone, but they might be a good product for someone who has large exposure to a certain type of foreign stock that needs to hedge that currency risk, for example. There's a lot of really legitimate reasons that have nothing to do with speculation, like is being implied by some more paternalistic regulators. And I think that technology is a great equalizer for rural communities, like Rebecca said. It's a great equalizer for everyone, but especially for rural communities when they don't have the brick and mortar broker-dealers or IAs that might be serving a lot of other communities where there's a higher population, and frankly, the juice is there's more juice to squeeze. So it makes more sense for them to be in those areas. So echoing what Rebecca said, technology equalizes the playing field for everyone from all different walks of life.
As we talk through the issues of financial technology, Tim, could you talk a little bit about your perspective on BSA, AML, and national security as we, focus on, some of the things we have to curb?
Yeah, I think that's become a prevalent part of the conversation, especially with respect to digital assets. Just last week, we had a hearing. Carol was kind enough to testify and offer her expertise at that. And that was our second of 2 hearings. So the reason we're prioritizing that now is in the wake of the conflict in the Middle East. You might have seen the headlines where Hamas had raised money using digital assets, and that kind of compounds some stories we've seen in the years prior with respect to mixers as well. So I think members on both sides of the aisle have a lot of questions with respect to what authorities are out there, what authorities does Treasury need right now to combat illicit finance in this space. So there are plenty of bills out there, probably about 5 notable ones that they all kind of have their own different approach, but for the most part, lawmakers are still kind of scrambling around to really try to see where they need to land in terms of approaching that issue. And that will probably carry on for at least this Congress, but there's some serious concerns, but for the most part, we have some proposals out there, but it's, again, a constructive dialogue. I hate using that term sometimes because everything's a constructive dialogue, but yeah.
Well, Andrew, one thing I've been thinking a lot about it when about 2023 ESG investing was like the topic du jour. Today it seems to be Gen AI. And I wanted your thoughts on, kind of what next steps will be in the Senate on, an AI framework.
Yeah, so I'm actually pretty optimistic about the future of an AI framework in the Senate. When ChatGPT first debuted November 2022, it's the first step of Skynet, and we need to have a wholesale Department of AI safety. I think we've sort of stepped back from that, and one thing I've been really encouraged to see is a bipartisan group of senators has come together and last year led a series of forums on AI, and so that brought together leaders in academia and tech and labor and civil rights groups to come together with senators and discuss, what is AI really? Is it, this nebulous blob, or is it just a series of code? Is it going to end the world, or is it going to help, put everyone out of a job, or is it going to help make coders and lawyers and other professionals more efficient at their jobs and, sort of eliminate the laborious, time-intensive tasks? And so that was a really good first step. We had, I think, 12 of those discussions that were well attended by senators. I got to sit in on a few of them. And that was a really good first step. But now we are going to the business of legislating, and the approach the Senate is taking is looking at AI within committees of jurisdiction. So my Senator Crapo is ranking member of the Finance Committee. Finance Committee 2 weeks ago just had a hearing on AI in healthcare. So, what are its uses, what are its risks? Do we need to regulate it? Do we need to, how can we foster innovation there? 2 weeks before that, so in January, the Senate Banking Committee subcommittee had a hearing on AI in housing, and that was a discussion of, same thing. How can we use this? What are the red lines? And so I think we're still in the investigative and exploratory phase. We aren't quite there yet to figure out framework, but we are getting a more measured sort of holistic view of what AI is. How far should we go in regulating it, and where should we, take a step back and let the free market, let the innovators take the lead and, develop this technology?
Can I emphasize a point on that? Because I think with AI, it touches every industry. So passing a bill because it's inevitably gonna, if you had one holistic bill that tried to define what AI is or conduct like a holistic approach, it would be referred to a ton of committees in Congress, which that's the quickest way you could kill a bill, because that forces a lot of coordination. and I'll let you draw your own conclusions on how well there's coordination in Congress. But that's why you saw, like, Senator Schumer called a bunch of CEOs and experts in to do a massive roundtable, because while we, like in financial services, we have an AI working group to kind of explore, and we heard it today, you know, how much of an impact AI can have, whether it's robo-advising, credit underwriting, compliance. So, you know, there's plenty to deal with in financial services, but it's very easy, depending on how you define it, to kind of go into another jurisdiction. So not to sound too pessimistic, but it makes it difficult.
It's a great point. I think it's a little bit similar to what we've seen with privacy in the past, where we've not been able to reach a consensus on what we need to put in, that we won't leave something out.
Yeah, that was the first bill we did this Congress, was a privacy bill, because
Yeah.
we had to do it on Graham-Leach-Bliley, where we kind of expanded that, but between us and Energy and Commerce, it made it difficult.
Correct. Yeah. One thing I'd like to ask, because I think it might be interesting, is Becca and Connor, would you talk a little bit about your transition from working on Capitol Hill to the private sector?
Want to start?
I can start. Well, I've newly transitioned, so Connor will have much more insightful thoughts on this. So I'm at a firm where we represent a lot of different clients and a lot of different client interests in the financial services space. So in a way, it kind of feels like I'm still on the Hill, because you're balancing the needs of different folks. And I miss working for Senator Crapo. I really miss coming back to Idaho all the time. So that's something that I feel like I left behind. But going into the private sector, I think you have a knowledge of understanding how Capitol Hill works. But in my role, I feel like in a lot of ways is similar, because you have this broad portfolio. And I really have enjoyed hearing different, you know, industries' thoughts on these things, because I think when you're on the Hill, sometimes you don't necessarily listen as much as you do when you're in the private sector. But it's really refreshing to hear how engaged folks are, and really paying attention to what happens in DC, and it reinforces that work's really meaningful, and it's really important for Congress and the government more broadly to work with stakeholders to make sure that laws are enacted that are good for the economy and for society as a whole, and don't have these unintended consequences. And I feel like in regulation and in laws, we balance that all the time, right? Everything is well-intentioned. However, as Connor has talked about, some of these proposals may have negative impacts on consumers and other folks.
I agree with everything you just said. I think the number one thing that working in Congress has helped when you're in government affairs is, you know, you could watch Schoolhouse Rock, or you could take a civics class, but it's really not how it works. The bill moves through committee like as the "I'm Just a Bill" song goes, but there's a lot more going on behind the scenes. And what ultimately, I don't know if you would agree with this, but government affairs is a sales job. You're selling a company's ideas, objectives, and you got to find a way. And having worked for different members
I
of Congress,
call it more of being an educator.
We're selling ideas, and we're selling policy objectives that, you know, either are working in favor of like our customers and the constituents of a certain member, or we're pushing back on regulations that we think are going to hurt our customers or those senators or House members' constituents. And I think working in those offices and knowing because different members care about different things. Like, you know, Chairman McHenry is going to be a little more in the weeds on what certain regulations do and how they affect the market overall, where if you go and talk to a member who sits on the Energy and Commerce Committee who doesn't really know a lot about financial services, they're not going to care as much about what each individual regulation does exactly. What they're going to care about is, how many constituents do I have that are going to be affected by this? Do those constituents use services that are going to be affected by these regulations? It's more, and that's what I mean by the sales job. You got to know who you're talking to and know your audience and be able to talk about the things that they actually care about. And I think working on the Hill, like it's a people business. Like, you know, for example, Tim's a Steelers fan, I'm a Ravens fan. Day after the Steelers and the Ravens play, I don't call Tim up because the Ravens probably beat them, so he's going to be in a bad mood.
No,
Yeah.
I disagree. I will say, and I agree with your point, Connor, I've worked in government affairs for quite some time, and I would say I spend 90% of my time teaching people who are way smarter than me Civics 101. And so I do think it's really important for them to understand the point you just made about constituent services. Every member of Congress has constituent services. It's so important. And I don't think that people within a corporate structure really understand that while they think they're the most important, really the constituent is the most important to the elected official. With that, I thought I would just ask everybody, we'll go from Andrew back to Becca, and maybe just talk about the things you're most excited about in the coming year and those things that you're a little bit concerned about.
Well, I'll start with concerns just so I can end on a positive note, but appropriations, that really is a big issue because that has eaten up so much time this Congress. As many of you know, it's an election year, and the calendar is pretty skinny on the amount of days we're in in session and can actually do the business of legislating. And at this rate, as soon as we finish FY24 approps, whether it's next week or 2 months from now, we're going to have to go immediately into FY25, which prevents us from doing all the other important work, housing crisis, fentanyl crisis, you name it. We're focusing on appropriations instead. And so that's been a concern, but I am optimistic. There are important discussions being had. I mentioned AI. We're having debates about bolstering our national security at home and abroad, and there's a tax bill pending before the Senate. The House already passed it, and there's a lot of important provisions in there for both addressing the housing crisis, which is for those of you who live in Idaho if you're from Idaho, you can't afford a house. It's pretty bad here. But there are also a lot of provisions which are may be important for many of you regarding R&D tax. So the Tax Cuts and Job Act of 2017 changed the way you can deduct R&D expenses. And this tax bill would amend that to make it more business friendly so that you can actually do R&D and prepare us for this next generation of AI, of fintech, you name it. So that debate is being had. It's not just shut the door and let's just shout at each other for the next 10 months or whatever. We're having that debate and we'll hopefully see action soon.
Great. Tip.
I'm going to kind of copy you on the funding part. That's a bad one. Because with the way Congress is split right now, with Republicans controlling the House and Democrats controlling the Senate, the only opportunity to get laws is really must-pass vehicles and seeing what legislation you can get into that. So that makes it very difficult. We'll see what happens, but that's probably what I'm most pessimistic about. In terms of being optimistic, I like that we're diving into the artificial intelligence conversation. And even though it's broad, we're talking with stakeholders and industries and how they use it, but also regulators. We have a bill that is about to be introduced on how to help regulators acquire the up-to-date tools, or basically ways that they can enhance their supervision by using the latest tools and technologies. Now, the one thing that gets in the way of that is the federal acquisition regulations, which people don't think about, but it does make it hard to keep with the times for a lot of regulators. So, we have one bill that is going to ask for a report on what barriers there are to basically staying up to date, and that's a bipartisan bill. So, there's small things like that in the AI space that I think is exciting because it's going to last for quite a while.
Great, Connor.
I share a lot of the things that were just said. To add, I'm going to sound like a broken record here, but I think top-down regulations from a few regulatory agencies in DC that affect everyone in every state, and really we should have approaches that are a little more built upon, like Senator Crapo said, the federalist system, that where the states have a larger role in they're closer to the consumers. The state securities regulators in each state knows more about what their constituents actually need and what kind of frauds or scams they are being affected by, more than a large bureaucratic agency in Northeast DC. But I'm also a little, this is a little off topic, but I'm a little pessimistic about a lot of the spending, and I think that's something that our country is facing a pretty big crisis moving forward. And there was someone on a panel earlier that talked a little bit about the importance of the role of the dollar and it remaining as the global reserve currency. Well, if we continue on the fiscal path we're on, that we're playing with fire there. What I'm optimistic about is, I'm going to piggyback off of what Tim said. There are a lot of members of Congress, especially those who are from generations that are a little younger, that are really excited about learning about new technology, and they grew up with technology. And I think that I see a bright future there. I think the rhetoric right now is obviously very partisan from a national level, but if you spend time, I know it's hard to believe, but if you spend time in the halls of Congress, there's a lot more friendship and collaboration going on than they would let you, they would let on CNN or Fox News, for example. There's a lot more collaboration than people realize, and I think that's a good thing. I think it's going to take some time for there to be actually any deliverable products, but I'm optimistic about the knowledge set of certain members of Congress and senators now when it comes to technology, whether it's ranging from crypto to AI to how technology can help, foster more financial inclusion in the markets.
I guess I share y'all's concerns with government, with funding the government, with spending. Those are things I'm pessimistic about. What I'm optimistic about is the year-end package. I'm really excited to see what bills make it in and get passed at the end of the year, because we don't do regular order anymore. I agree that there's refreshing talent on the Hill. There's a lot of really great young staff and members that are really interested in these topics, and I think that there's an opportunity. Everything seems really nasty. The big issues are really hard to tackle, but I'm excited to see what small bills pass that really affect consumers and individuals' lives. And I think that if you pay attention between the noise, there's some really great things going on in DC. But I am very concerned as well about spending and kind of this partisan environment we're in. I think it makes it really hard to legislate.
Well, as you can see, we're really lucky to have such great people who get to work with us every day. I will say every single person on this panel, including me, have been touched by John and his brilliance. And I think every single one of us can agree that he has helped in some way crafting legislation, presenting ideas, and some of the great tools that he's given all of us, he's bringing to the state. And so we commend you all for bringing him here and for getting the benefit of working with the department. I mean, from my perspective, it's really been such a great joy, and I think everybody shares our views. So thank you for listening to us today, and please reach out.
This was a fabulous experience. I hope you all enjoyed the conference. I really cannot express enough my appreciation for your attendance and your attention and the various viewpoints that we heard. I have to tell you that I come away very much encouraged, and I do so because I heard a lot of opportunity to collaborate with our federal partners, and that isn't always the message that we get sometimes in the state. And so I want to thank each of you for your perspectives, and it was pretty heady to be around such a group of smart people. I want to say some other thank yous. I want to say thank you to John. John, as I said, has been with the state for a year, and he was such a different type of candidate for this role that I knew we had to snap him up. And it boggles my mind that he wanted to leave DC and be in Idaho, but we are so fortunate for that. And I'm just glad I didn't scare him away. That could have happened. And I want to thank Celia and Kelly for their help with this conference. We couldn't have done it without you. And I want to thank the panelists and the presenters. I've had an opportunity to get to know a couple of you ahead of this because I have been in DC a couple of times, and I've certainly heard your names. So when I saw you, I went, oh, that's who you are. So it was really exciting for me personally to see everybody and have you here in Boise, Idaho. And again, thank you, each of you, for attending. Our biggest obstacle is going to be, what do we do next year? So be thinking. Because we would like this to be an annual event. It is really something that we discuss a lot, innovation and doing things differently, speeding things up, using a different approach. I'm wired to do this, but I'm also, because I'm a private sector person, I'm always asking, why do we do it this way? How long have we done it this way? And I know that annoys some people, but I can't help it because I am all about removing obstacles. And sometimes the obstacle is the statute, and the statute is out of date, and we're trying to work on that. I have come to understand I simply don't have control of all of that. But it doesn't mean that we're going to stop trying where we need to. So I think this is a fabulous start to this. I hope you enjoyed it as much as I did. There is going to be, magically, a barcode on the screen for you to leave comments about the conference. We're trying to be paperless. And so please do share your comments and suggestions for what we can do different and better. I'm a person that's always in a state of continuous improvement. And again, it's just because it worked this year doesn't mean it'll work next year in exactly the same way. But we hope we see many of you back. And with that, is there anything else I need to say? Thank you, and safe travels for those of you who have come from afar. Thank you.